To the morning MPC Morning Call. I'm Mark Gardner. 24th of December, Christmas Eve. This will be the last one for the year on the podcast. 2025, the year of AI. I think silver and platinum would definitely beg to differ. They are providing the Santa rally that everyone's been looking for. With platinum up nearly 11% last night. Up 51% for the month, and silver, up 135% for the year, but up 43% this month alone. Very much, if you're listening to the US analysts, it's very much on the back of supposed rate cut hopes, but realistically, outside of the US, it's basically to do with the fact that no one's got any trust in the US dollar anymore. So while they're all saying that gold is the US analysts, particularly listening to Bloomberg and things this morning, they're very confused by the gold rally and, say, the copper rally, where copper is a very risk on and gold's supposed to be a risk off. But the rally in all these precious metals, it's not risk off global markets. It's risk off US dollar. 38 trillion in debt, worsened, horrifically again this year. Despite the Doge cuts, we've essentially seen Trump hand them back in tax cuts to the wealthy. The tariffs have all been pared back. The fiscal policies are just not in line. The monetary policy now. They're expecting rate cuts next year, but last night we got a 4.3% GDP number, while the analysts try to write it off as, it's backward looking, blah, blah, blah. The Fed has never, ever cut rates when GDP's been at 4.3%. That is just the dumbest thing I've ever heard in my life. And if they do, that just shows that the central bank has the wheels have absolutely fallen off, and they are just under the control of a president who possibly, isn't the best at budgeting. I think he'd probably be the only businessman in the world that's managed to file Chapter 11 on 6 casinos. How the hell do you lose money on casinos? Is beyond me, but now apparently that's the guy that's steering the central bank of the biggest economy in the world, and the US dollar, for me, that'll probably be the black swan risk of next year. 2026 will be just the US dollar becoming toilet paper, which is just going to keep pushing those precious metals higher and higher. It won't mean anything probably for US companies, particularly those hyperscalers in 2026, and a lot of the businesses, etc. Because everyone's going to be happy with US companies. You just probably don't want to own them in US dollars. So I think currency hedging will be a very key thing for 2026. We've had a great recovery in the Aussie market here in the last couple of days. We're back to strong buys across the board in the technicals, up 2% for the week. I think the SPY was about flat, but I dare say we'll have, in really thin markets, we'll have a really positive half session today. I think we close at midday today. And that'll just be led by gold and silver, copper stocks. Our mining sector will just bring it up. We'll probably get some sort of bounce in the, in some of the tech stocks, I would imagine. As you'll see a little bit later on in this podcast, it's going to show you some sectors and things. But last night's rally really was on the back of, the usual suspects, Nvidia, Broadcom, Google, Amazon. Rest of the market was very patchy, I've got to say. And look, I think personally this the volumes are around about a third of normal. So you probably don't want to take any major lead out of this, I wouldn't imagine. And I would say that, 2026 is going to be a very different year. It's not going to just be the layup where, the weighted, the largest weighted stocks like these guys here in Nvidia, Apple, Broadcom, Google, Microsoft, Amazon, Meta, and etc. Are just going to drag this index higher. I think you'll see this rally definitely broaden. I did call that this year, but it didn't really happen. I mean, it happened a little bit, but not to the extent that I would have thought. But I would imagine with two major, IPOs supposedly coming this year, and OpenAI, where he wants $1 trillion. I think that's another black swan risk as well. OpenAI, I think, is a very big risk of having the rug pulled from it. But if that does go well, and it's anywhere near that $1 trillion valuation, I mean, where's that money going to come from? It's going to have to come from these big cap, these mega cap stocks. People want to get involved in the IPO, and then SpaceX, which will be 1.5 trillion, which is hopeful as well. Again, where are you going to find 2.5 trillion from? It's going to be from these massive stocks here. And while their valuations aren't out of control as it stands at the moment, I would say that after a 2-year very solid rally, we will start to see some broadening. I dare say memory stocks will do pretty well in 2026, and amongst a few other things. But you'll have to read my 2026 outlook to get the 5 major themes we're looking at this year. Now, commodities. Obviously, platinum up 22% for the week. As I said, up 53 or something for the month. Silver up 13, record highs in silver, and at $71. I went on Ausbiz on the 1st of December and rejigged our silver price target at $70. It took 22 days to get there. I dare say, these runs, we're starting to trim. I think this has been an incredible run. These precious metals do tend to go on wild runs and then stay dormant for basically this is the first major rally in 15 years for these guys. So, you want to be on it when it's going, and then you probably just need to ignore it for about a decade after that. But I don't think it's over yet. As I say, platinum's now at 2,300. Back in the 90s when I started, platinum was worth 3 or 4 times more than gold. So I mean, it's worth less than half of gold at the moment. So it's not inconceivable, like in the last 30 years, for at least a level peg. So that's one of the wilder calls I've got for next year, is that I think platinum potentially, and it is an outlier. It's a very slim chance of probably happening, but platinum could end up being the same price as gold, which as much as it did make a fresh record high last night. Don't get me wrong. I've been talking about silver and platinum, but I mean, you can see why with these massive weekly gains and the massive monthly gains. Lithium's up 10% for the week as well. Uranium's up 5%, and crude's up 6%, and copper's up 4%. They just kind of pale into insignificance when you've got these massive rallies coming in the grey precious metals. So that has been it is a massive joy, for myself and MPC Markets. We've had silver on all year. We've had platinum on in a enhanced growth structured investment since May, which is now up over 400%. It has been it's been one of those, once in a decade calls. It's panned out very well. I've been waiting for quite some time. I don't know, look, as to how much is left in it. I do think that these things can potentially double next year. I don't think it's going to be in a straight line necessarily. I think you'll probably see things calm down in the first quarter of next year after this enormous rally. And then once we start to see what happens with the Fed and how much, control that Donald Trump wrangles over it, if it ends up being the market's view that he has control over the Fed, bye-bye to the US dollar, because there is no way you would be buying treasuries with a bloke that's been bankrupt or filed for Chapter 11 6 times. That's not the captain you want. That was supposed to be why the Fed, central banks are independent, is so, guys like this who don't stay in their lane, aren't supposed to get control. So ASX 200 this year up 7.8% as of yesterday. And I've just got the sectors here. Bit of a flip, I've got to say. So tech last year was up around about 20, and materials was down about 20. So we've really had that flip. The big surprise this year is healthcare being the worst sector. Look, that is massively to do with the fact that CSL's down 37 odd percent. I think the Australian healthcare sector is probably the cheapest one of the cheapest healthcare sectors in the world. The rest of the world seems to have been able to see past the fact, well, past these tariffs, and look into the future. Basically, these tariffs haven't come to fruition. RFK hasn't come to fruition with his loony, some of his loony policies. The rest of the world seems to have seen it. Don't know why Australia hasn't. The likes of Telix and things, and CSL, and I mean even by pharmaceuticals in Australia, and Sigma hasn't really rallied this year. It's just been a horrible old year. Energy down 4%, and look, that's just based on crude being horrible. And I would imagine, I'm not entirely sure. Energy was the worst sector last year. I would say that people will start to see value. But I think healthcare in Australia will make a major rebound next year. Industrials, financials, just basically pacing the index. Consumer discretionary and consumer staples, I think, are relatively cheap here overall, considering our retail sales numbers and the fact that the RBA is talking about the strength of consumers. So I think there's going to be some opportunities. And I think the Aussie index will do pretty well next year. I mean, we've trailed the US index by about 8%. But, while everyone goes, AI drove the US rally, tech's been blah, blah, blah. The bottom line is that, copper, copper, silver, gold, and, well, we don't have it in many platinum stocks, but have all smashed AI this year. So Newmont has outperformed every AI stock on the or mega cap AI stock by miles this year. So I think that the Aussie index is relatively cheap next year, and I think if we get a recovery in our tech and our healthcare, materials is going to continue to go, and those guys in the middle there have just got to keep pace. So I think we'll do pretty well next year. So just some background for us here. We've had a great year here at MPC. And look, our top picks. So our high conviction picks, we've got a list of around about 40 odd stocks where we've got where our top picks per sector, like balance and income on the ASX, and mining on the ASX small caps. We've got US global list of stocks as well. List of ETFs. So the ASX 200, 7.8 without dividends. So, just be wary of that. S&P at 16.25 without dividends as well, but I mean, that won't make much difference there. The average of our 40 odd picks is up 25%. Our top picks, Newmont up at 162. Energy One on our small caps has been had a great year. Up 160. US global, we had Palantir from last November, which we still hold, up 158%. Top ETFs, silver, the physical silver, up 123. Copper miners up 76, and a sneaky one here, defense tech, DTech, up 61. So and that one we've really only had as a high conviction ETF from probably the last 9 months, or 9 to 10 months really. Which would be around about the same result. Now, unlike the rest of the market, I'm not going to do the look at what we did, blah blah blah. These are our worst picks as well, and both in the healthcare sector. Telix Pharmaceutical, TLX, and CSL both getting smashed this year, down 49%, down 37%. As I just mentioned before, look, Telix Pharma I think is just misunderstood. I think that they'll maintain their guidance. I think things will progressively go better. They're US based and they've been hit on tariffs. Incorrect. Radio pharmaceuticals is the fastest growing pharmaceuticals sector, subsector in the world. Tick for them as well. They had really positive results from Chinese health authorities 2 days ago, with a 94.6% efficacy of the new drug that is supposed to be, the game changer, and which is massive, and 64% of of people after the diagnostic was taken changed the tact of their treatment, which is also massive. I think this is probably one of the best buys leading into 2026. I think it could quite easily get back to those record highs, just as long as it ticks a few boxes. I think the analysts will just turn around, because I don't think I haven't found anyone who's done the work on it, and I would expect it to be to recover. CSL as well. It'll get this demerger out of the way. It's a good company, down 37%. I think just analysts got too bullish. They got caught out. And at the moment, I would expect it to probably just recover. I don't think it'll do what Telix will do. Another one in that space is Clarity, that radiopharmaceuticals. I expect a big year out of them as well. So yeah, we've had a pretty good year, but it's not all smooth sailing. We've also had a few of our small caps get belted as well, like Findy. But you got to take the good with the bad. We don't, you're going to have losers in these games, losers in this game, and I'm not one to shy away from that, because that's where our clients need the most help, is managing the worst stuff. It's easy to watch things rally. If you want to our market outlook, go to for 2026. There's 5 key themes we're looking at. Got some. It's about 44 pages. You can find it on most of our socials and things like that. We got 11 out of 14 right last year. 2 were up for debate, and 1 was incorrect, which was, I thought energy would recover a fair bit better, in crude particularly, which didn't really happen. We've got some pretty good picks for actual investable and actionable themes this year. It's not 44 pages of economics. There's some nice graphics, as you can see there. It's not dense. It's not hard to read. And then we've got a webinar on the 15th of January, and there'll be some actionable stock picks in all of those 5 key themes for you to take into 2026. You can go to, have a look on our socials for where to sign up there. There will be probably about maybe 5 to 10 free stock picks in that webinar. But you can grab your outlook now for free off our website. So look, I'd like to wish everyone a Merry Christmas and a very prosperous 2026. Thanks for following our content. Thanks for listening. I hope you and your families all have a great break and a fantastic 2026. And we will speak again in